All right, welcome back to another AutoTrend system trade review video. In this video, I want to show you some stocks, some trades that we had in the previous days, last week and last month. And those are, I have two examples today. Actually, I have three examples. I have two trades on Nvidia, and we'll see another one on LLY on the second half of this video. So I want to basically show you a very standard way that we're using the AutoTrend system without any additional tricks like divergences and stuff like this that I have shown in the previous videos. In this video, I want to focus on the very standard strategies that we have, kind of like the bread and butter of our system, my go-to setups, just following the arrows, following the rules, going with the trend, and taking trades along the way. So let's start here with Nvidia. So we basically got a short signal on Nvidia here last month, the beginning of last month. This is the 15-minute time frame. I like to use the 15-minute and the 30-minute time frame for stocks, especially for swing trading, holding them over several days. So I found this is a good time frame that gives a good amount of signals frequently enough, but not that frequently, so that you can manage your trades once a day or even once every few days, really. So we got this short signal here on Nvidia, and normally when we get a signal, I would normally place my stop loss at the previous swing high, but in this case we got this really big drop here in Nvidia, and if I had entered here as we broke below the low of the signal bar here, and if I place my stop loss all the way up here, you can see that's a very long distance to have my stop loss compared to the price action, right? So what I would have done in this situation is I would place it just above the previous swing high here. You see, just above this small swing high. It might not appear as much, but if you will notice, price came down. Let me just draw that so you can visualize it a little bit easier. So price came down here. Let's change this to black. So price went down here, and then it went up, and then down again. So that is actually a swing high right here, right? That's a swing high right there. So you can go ahead and place your stop loss above there. Once we do that, we have our stop loss, we have our entry, then we have to select our profit targets, and that's where our second tool in our toolbox comes in place. These are these horizontal profit-taking lines here. These are the dynamic profit levels that I use only as taking profit targets. These are very important, very high probability support and resistance levels that the dynamic profit levels, the DPL indicator, draws automatically on my chart for me on any chart that I place it on. I don't have to do anything, it just does it automatically. It's based on some quite advanced mathematical calculations, and basically it finds quite important and strong support and resistance levels. As you will notice, price comes down, hits it, and then bounces higher several times also here, and then once it breaks below it, it comes back and uses it as resistance, support, and so on, finding support here, finding resistance here, and so on. So I might not be using those as entries, although I know that many of our members do that. They use them as entries as well. For me, I like to be traditional, I like to be conservative, so I use them as profit-taking levels only. So my first profit target in this example would have been down here. My entry is here. My first profit target is here, because that's basically the next available dynamic profit level. So that's my first profit target here. A good 3.6 to 1 risk to reward ratio. So I'm risking $1 to make 3.6, or I'm risking $100 to make 3,600, and so on, based on your account size and your risk tolerance levels. So that's the first profit level target. The next one is over here, and they ended up reaching it. So that was on the 15th of September. We entered on the 6th of September, so about like a week and a half later, and then finally the third profit level was reached as well. Normally I like to go for 3 profit levels, and I will be scaling out on each level as it hits it. Basically, that's the way I do it. So let's say I have I don't know, let's say I have 1,000 shares here, I short 1,000 shares. Every time it hits one of my profit levels, I sell, I cover or I exit a third of my position. So if I'm on 1,000 shares, maybe I sell, maybe I cover 300 here, 300 here, and then the final 400 I will exit all as it hits the third profit level. Normally, I don't wait for an opposite signal to exit my trade. You can do that, and there are many members that are doing that. But me, I like to take profits as the trade is working in my favor. I don't really like the feeling of giving back some profits until we get a new buy signal, right? So I like to sell as the price is moving in my direction. Right, so that's the way I do it. So by the time it came down here, I would have been all out of my position because it hit my first profit target, second profit target here. Let me move this here. Second profit target here, and then third one here. So I would have been out of that position. And then we got a buy signal on Nvidia shortly after, a few days later. Basically, we got a buy signal on this bar right here. Right on this bar. So the entry would have been right here as soon as we broke above the high of the bar, and then the stop loss needs to go just below the prior swing low. So around here, you see price came down, and then up again. So that would have been my stop loss right there. It's a bit wider than the previous one, but basically you just have to follow the chart. Right? Sometimes you will get a lower risk trade, sometimes you will get higher risk trades. But the important thing is to always risk the same amount of dollar amount, right? So regardless of the distance on the actual chart, it's important that you adjust that to the price, to the distance of the entry to the stop loss. So let's say here the distance of the entry to the stop loss is $11, right? And on this one, it is around $4.40. So even though this is a bigger stop loss, instead of taking more risk, I will simply reduce the amount of shares that I'm buying here. So if I'm buying here, let's say if I'm shorting here because it was a short, if I'm shorting here 1,000 shares with a $4.4 per share stop loss, in this one I will drop down my position to something like 400 shares. Because now the stop loss needs to be higher, so it needs to be wider, right? So I don't want to give that much money back. I'm always going to be risking about 1 to 2% of my account on any given trade, right? And then we basically follow the trade as it unfolds. We just sit back and wait for the results. The first profit target is here, right? This horizontal line, this is my dynamic profit level. First profit target here, second profit target, just the very next one, and then I'm waiting for the third profit target to be hit. It might do it, it might not do it. In any case, I would have been basically out 2/3 of my position because again, I like to scale out in thirds. So let's say I bought here 300 shares, I would sell 100 here, 100 here, and then I have the final piece for the final profit level right here at around $484. So that would have been entering at 440, waiting for 484, meanwhile taking profits as it hits my dynamic profit levels, which are automatically plotted on my charts by the system itself. Right, so that's the way I would do that. If it doesn't do that, if it doesn't hit that level, no worries, because at that point, as soon as I take my first partial profit, my stop loss needs to always come up to break even. So I have paid myself on this trade. There's no way it can turn red. But at this point on, it can only make me more money, but I can never lose money on this trade because I have already paid myself, and the stop loss at that point needs to come up to break even. Basically, that's the way I do it. So it's a very, very systematic way of trading. I'm not really analyzing much. I'm not doing much of technical analysis, almost none at all, because I have my systems, I have my entry signals, I have my exit signals, my dynamic profit levels, and I just have to follow the market. And the market will always do whatever it wants to do, right? Our jobs as traders is to come prepared, have a plan, know where to enter, know where to exit, know how to manage our trade so that we're not surprised or we're not ending up being uncertain of what to do next. So that's basically the way that I do it, and the way that I've been doing it a long time, and how our members are doing it every day with the AutoTrend system. The second example I want to show you is right here. So this is LLY. I like Eli Lilly because we've been on a massive uptrend on the daily chart. If you look back here, we've been on this buy signal. We've been on this buy signal since November of 2020, and we got this buy signal when Eli Lilly was trading at around $150, right? $150. Right now, it's reached a high of what is here? $629. So that's been a massive increase on Eli Lilly. Let me actually see the percentage here. That's around 365% since the buy signal on the daily chart. Obviously, it has not given another buy signal since then because Eli Lilly has just been on a massive uptrend. But we can still look on lower time frames for a signal in the direction of the main trend. So if I switch down to the 30-minute chart, Eli Lilly gave us a really good buy signal, a recent buy signal. This was the 6th of October. Right now it's the 16th, the day that I'm recording, so that was 10 days earlier. Basically, LLY gave a short signal, so kind of a pullback, and then it resumed its uptrend. I love to see that. I love to see stocks that are on a very clear trend on a higher time frame, and then I want to wait for a pullback on a shorter time frame, and when we get a signal back up in the direction of the bigger time frame, that for me is a golden setup, because I know that those signals have a very high probability of working out, because basically we're going in the direction of the bigger players. We're going in the direction of the higher time frame. It's the path of least resistance, right? You're going with the flow of the higher powers in the market. So the entry here was, of course, as soon as the entry signal closed, we need to place our order on the high of the bar that caused the signal to change, and then as soon as a subsequent bar breaks the high of the signal bar, which it happened on the very next bar, we're triggered long and we can follow that trade. In this example, the swing low, we were very fortunate in this one because the swing low was very close to our entry. So it would have been around here. You see how price came up, down slightly, and then up again. If you can't see it, so it went up here, down here, and then up again. So that's a nice swing low here that we can place our stop loss just a little bit under that. And we are aiming for our dynamic profit levels here. So let me just see why they're not appearing. Oh, because I have it on the same. I don't have them on this chart. Let me put them back. Okay, here they are. So my profit levels are basically, the first one is here. That's the first target that was reached last Tuesday. The second profit target was also reached right here. That was reached on Friday. So exit a third of the position here, another third here, bring the stop loss to break even, and then simply hold and wait for the final profit level to be hit up here. Again, this may happen, it may not happen. It doesn't matter at this point because we have already paid ourselves 2/3 of the position. We have closed 2/3 and we're moving the stop loss to break even. At that point, it's a risk-free trade. It is a profitable trade because we have sold 2/3 of our position and we're just holding and waiting to see whether the third profit level is hit, or maybe the break even is hit and we're out of this trade and we have made money on 2/3 of our position. So it's a win-win, whatever it happens at this point. So that's basically an overview of how I use the AutoTrend systems components to make a clear, systematic way of trading, a very clear strategy that honestly doesn't require a lot of thinking or a lot of analysis at all. You simply have to go with the signals, have your entry rules in place, make sure that you're doing your risk management correctly so that you're not risking too much on any given trade. And from that point on, is basically following the signals, taking partials whenever they are available, whenever we hit our profit level targets, and then letting the trade play out. I mean, it's as simple as that. It's really not rocket science, and trading is really not as complex as some people unfortunately have made it out to be. I see a lot of people, especially on YouTube and on social media, kind of overcomplicating things, a little bit a case of analysis paralysis sort of thing. They get so bogged down in the technical analysis part of trading and all the hundreds of different rules and different ways of seeing the market and reading the candlesticks and all of that, they kind of miss the point. And the point is, go with the market, follow the market, right? Wherever it's going, go with it. You simply have to have a few sets of rules, a few tools that you can use to see the direction of the market and then go with it. It's really not more complicated than that, and it's not a magic combination of candlestick patterns and different concepts or any of that is going to make you successful. What's going to make you successful in the end is have your own set of rules and be able to follow them, and most importantly, be very strict with your risk management. Right? That's really it. Simply follow the market, and as long as you have a system that helps you do that and helps you do that systematically, then in my opinion you're good to go. I know that it may sound simple, but often in life the simplest way is usually the right one, and I have found over the years that with trading that's very much the case. It's a little hard for people to understand that, because trading and the markets have been made to look like this, complex thing that you need to solve, and only 10% or 5% of people are able to do that. Well, actually, trading is quite easy. It's the psychology of trading that the majority of people have a hard time with: accepting losses, taking care of the risk management, following the rules and all of that. But as long as you have a system that gives you very clear rules on what to do and when to do it, then it becomes much simpler after that. So that's my side note there. I hope that wasn't boring. It's just something I've been thinking in this past days. So all right, I think we'll end it here. I hope you found this video helpful, whether you are already a member of the AutoTrend system or perhaps you're thinking about giving it a try. So all right, thanks for watching, and yeah, I'll see you in the next video. I'll try to make make these videos a little bit more often. I've been getting a lot of requests to do that, so as long as I find the time, I'm happy to do this, right? The problem is actually finding the time. All right, so thanks for watching, and I'll see you in the next video.